Welcome to Markets Now. I'm Michelle Work with Brad Kooima Kooima Varilek, and livestock futures. Well, cattle are back to the plus side. Hogs have seen a little pressure today, and we're kind of mixed in the grain trade. And Brad, cattle market, boy, it was a wicked correction in the February contract. I think $23 from the contract high to last week's low. But do you think the bottom is in there? Can we build on it?
Correction. Yeah, that would be understatement of the century there, Michelle. Thanks for visiting.
I have to keep it clean, you know.
Yeah, me too. Good luck. So this is about the size of the break that we had with mad cow disease.
Yeah.
Okay. It's about the size of the break that we had with September 11th. So then when you put that mark on the long-term chart, you go, well, that was the Holcomb fire. That was COVID. That was September 11th. What are you going to put on this one? Well, the market was too high, and we decided to take $23 off without really a great reason. If you've got a great reason, please share it with me, because I've been kind of searching for one along with most other traders. It seemed to me that now that we've gotten really, really oversold, just looking backwards in the mirror here, I think that the cattle on feed report changed the demeanor of the market a little bit, changed the confidence of the fundamentalist, at least, where you went from like, okay, so we're 4.7% less year-to-date slaughter, yet we have more cattle and feed, and yet now we're going to worry that the following report, which is this week, by the way, we've all been bared up for this report on Friday since the last report, thinking like, well, geez, I'm sure we got the huge placements in October, like we always do. So that's probably going to be with the slaughter rate. We're going to have a poor marketing number, so then we're going to have a bigger number on feed. So all of that, yeah, and can't argue with some of that. But is that not in the market now? Let's get to Friday. Let's get this report out of the way. I personally think that the placement number could come in a little bit less than what the guess is at 106.
Okay.
We shall see. But at some point here, though, one would think that the feedlot would bow his neck a little bit and say, you know what, 185 2 weeks ago, 175 this week, I think as current as I am, I think I'm going to see what happens here for a couple of days. I'd be curious to see if that isn't what might happen this week. If it isn't this week, I think it'll start to happen that way by next week.
What about cash, though? Certainly that was part of the story last week. Weighted average was down almost $5. Packers didn't buy a lot, though. Only 50,000 had negotiated. So can we start to see cash appreciate?
Yeah, nothing to see here, right? It doesn't make any difference if you have one person negotiating or if you have 20 people negotiating for your cattle. Price doesn't get affected by that. I've had PhDs tell me that in the room. I would beg to differ. The cash market was horrible last week. We finished up with cattle trading at 175 in some cases here. Some of those cattle, by the way, got exported a couple of states to the south. Interesting. I personally have cattle today that are going to Texas. I live in Northwest Iowa. And that's where the cattle are coming from. So that makes me a little encouraged. The packer has had very little leverage here for most of the year. And I think with the collapse in the futures, he got some leverage back and he took advantage of it last week. We already had, panic selling is a harsh word maybe, but you had people that, kind of freaked out. They thought, I better get in on some of these high priced cattle prices and quick sell them. Hey, it's a free country. I understand. Maybe you got cattle coming in. There's all sorts of reasons why people do what they do, and that's fine. But maybe this week now we catch a little bit, have the futures rally bounce. We're super oversold. It ought to bounce. We got a big up day on the macros today. And then let's see if we can't maybe work on getting this cash market a little bit better going into next week.
Yeah, talk about those macros too, because Dow up pretty good today on that CPI number coming in steady.
Right, and the bonds up 2.5 points. Basically the same story. It looks like my banker said to me this morning, well, it looks like it's working. In other words, things are getting way slowed down. People are getting stressed out by the interest rate, what it's doing. So we're slowing inflation, right? Filled my pickup with gas this morning. It's under $3 where we're at. So hopefully, that means that we're going to trend toward lower interest rates and, a little more, less nervousness, which the cattle seem to care a great deal about, of course.
Yeah. Hogs are a little weaker this morning. Are we putting some of those cattle hog spreads back on, or did this market just get too high and run up into chart resistance?
I'd say yes to both of that, Michelle. I think, part of the reason we rallied, I think, was, a big unwind of long cattle, short hogs. So you have they're covering the cattle and selling the cattle and buying the hogs. We came all the way back to the 100-day moving average again. That's been a level of big resistance here off for several months, and rallied, frankly, at a time where we saw the fundamentals as not being especially positive. Average weight's way over a year ago here domestically, and the price in China, everybody's talked about that, I'm sure, on your show. It's what, 40-some% less than a year ago, so they seem to be swimming in hogs there. Last week, though, we had a pretty good export number to them, so let's keep an eye on that. But to me, the hogs look maybe a little rich here in the seasonal time of year here. One would lean toward thinking lower anyway.
Yeah. Soybeans and meal both setting back here today. Just a routine profit taking, you think, here? And what about the corn market? We scored a reversal there yesterday. Can we build on that? Well,
quickly on the oil seeds first. For me, the meal's a bit of an anomaly. Extreme volatility, almost to the point where you wonder just who is out of step there, because that's how the market almost feels like. I mean, with this big moves, now we're sharply lower today. I'm more inclined to think that the meal has maybe gotten a little over its skis here relative to beans and oil. Clearly, we're building in some weather premium in for, over the weekend. The weather kind of shifted for now, really, really early, though, in South America. Be careful. I mean, you're not going to lose a crop this part of the development stage. They're just getting planted, basically. But maybe for you end users on corn, take a look. I thought the action yesterday was interesting. It had been sideways for months and months and months.
Right.
And it seemed like a weird way, we're going to just let everybody buy the low. And then you spiked, took out the low, and then just stopped and reversed outside day up. That seems to be a better way to make a low. I really would like to see it be higher today for the sake of, if you're bullish anyway. And a close above 483 on the December would probably, in my opinion, at least confirm that the lows are finally made.
Okay, we'll see. Thanks for joining us. Brad Kooima with Kooima Kooima Varilek. That is Markets Now.